Astral has selected its next CEO. Gary Arnold will take the top spot at the poultry producer in February. That's as current CEO Chris Skitter retires. Arnold has been with Astral for 28 years and holds the position of COO. A statement from the company says Arnold has been instrumental in implementing the group's strategic initiatives and has worked closely with Skitter to contribute to Astral's growth. Harmony is also named a new CEO. The bullion producer says Beyersnel will take up the role in January and will succeed Peter Steenkamp, who retires in December after holding the position for 9 years. Nel has been with Harmony since 2003. He has held various positions and also was appointed a Group Chief Operating Officer last year. Harmony has also announced the creation of a new role, that being Deputy Group CEO, which will be filled by Floyd Masemola. It says the creation of the role and Masemola's appointment was due to the importance and the focus that is required for the SA mines. MTN says it navigated a challenging macro environment in the first 9 months of 2024 and delivered a resilient operating performance as a result. The mobile operator had to contend with elevated inflation, foreign exchange movements and the conflict in Sudan, all of which put upward pressure on costs. For the period, earnings before interest, tax, depreciation and amortization fell 35%. When viewed in constant currency terms, EBITDA ticked up 3.4%. Looking ahead, MTN has kept its medium-term guidance unchanged and anticipates a full-year dividend of 330 cents per share. Goldfields has reported a 12% rise in attributable production in the third quarter. That's when compared to the previous quarter. But when compared to the same period a year ago, output slipped 6%. CEO Mike Fraser says the group expects a step up in production in the fourth quarter, and given that the firm has decided to keep Group 2024 financial year guidance unchanged. Telcom has provided the market with a trading update. The telecoms group says half-year revenue from continuing operations is expected to be within guidance. That's as it saw strong demand for its data offerings. The group also stated that adjusted headline earnings per share would be as much as 60% higher. MTN says the adjusted financial measure shows the underlying performance of the firm as it strips out the impact of a tax charge and restructuring costs. If those are included, then headline earnings per share are projected to either decline by as much as 5% or increase by the same margin. The Competition Tribunal has given Bidvest the green light to acquire Spec Systems. The approval has been given without conditions. Bidvest says the deal will allow it to pursue its strategic objectives of expanding and growing through regional product and service diversification. Spec Systems provides various products such as thermal labels and point-of-sale printers. Blue Label has announced a transaction through its subsidiary, the prepaid company, to buy a debt claim that Cell C has with international investment fund Gramercy. The deal carries a price tag of 450 million rand. This will be paid in tranches of 112.5 million rand in November next year and in March and November 2026. This will be funded from the company's own cash resources or existing facilities. The prepaid company will also purchase Gramercy's 6% holding in Cell C for 6 million rand as a separate transaction. Blue Label is Cell C's largest shareholder and says this move further demonstrates its commitment to stabilizing the company as it turns itself around. The JSE is set to welcome a new counter. Assura has been given the go-ahead to have a secondary listing on the local bourse. The firm is a diversified healthcare property specialist and real estate investment trust based in the UK. Its shares will begin trading on the JSE on the 21st of November. Assura says the move allows it to tap into a new pool of capital for growth. Mining productions registered a sharp increase. Output grew 4.7% in September from the previous month's 0.3% gain. This marks the second consecutive month of growth and the strongest since February. The rise was driven by an uptick in platinum group metals and iron ore output. In international news, weak economic conditions have hit the euro and could lead to the currency hitting the $1 mark. This follows Donald Trump's election win, which has raised the prospect of a hike in tariffs that could deal a fresh blow to the eurozone economy. Here's more detail in this package report.
The euro could hit the $1 mark. A weakening economic outlook on the continent has hit the currency. So did Donald Trump's U.S. election win, as it raised the prospect of a hike in tariffs that could deal a fresh blow to the eurozone economy. For traders, the $1 mark is a key psychological level, known as euro-dollar parity. The drop could exacerbate negative euro sentiment, leading to a further depreciation. This happened in the early 2000s and again for a few months in 2022, when U.S. interest rates were rising faster than Eurozone rates, as Europe grappled with the energy price surge that came with the war in Ukraine. A weak currency typically raises the cost of imports. That can lead to prices of food, energy, and raw materials rising, aggravating inflation. Conversely, a fall in the euro makes its exports cheaper. Good news for Europe's automakers, industrials, and luxury retailers, for example, and for individuals or investors with overseas incomes. It's especially positive for Germany, which is a huge exporter and has suffered from a number of headwinds, including a weak Chinese economy. Many currencies of major U.S. trading partners have been hit hard in the past several weeks by tariff worries. That includes the Mexican peso and the Korean won. If the past is any guide, it could be short-lived. The euro fell in the 6 weeks after Trump's first election victory in 2016 before recovering.
And Burberry will put the focus back on its core trench coats and scarves, be less ambitious with prices for bags and shoes, and use its British heritage appeal to win back customers. The struggling luxury brand said in a strategy update. Here's more in this report.
Back to basics. Burberry is to focus on its core trench coats and scarves to win back customers. In a strategy update on Thursday, the struggling luxury brand said it will be less ambitious with prices for bags and shoes while using its British heritage appeal. Burberry reported a loss for the first half of its financial year while announcing a $51 million cost-saving program. New CEO Joshua Schulman laid out his turnaround plan. He's Burberry's fourth CEO in a decade, and the brand has also seen 3 creative directors in the last 7 years. Burberry made an adjusted operating loss of over $50 million in the first half and said it was too early to tell whether it would make a profit for the year. It also signalled that its price increases had gone too far. Asia Pacific was the weakest region in the second quarter, with sales there down 28%. Burberry shares are down nearly 50% this year, and the company is widely seen as a takeover target. Shares soared over 14% following the turnaround announcement, set for their biggest one-day surge in over 4 years.